Welcome, ladies and gentlemen. Commodity TV here for you out of our studios in Herisau in Switzerland. And now with me here is for the first time at Commodity TV, Darren Klinck, the CEO of Bluestone Resources. Welcome, Darren.
Great to be here.
Yeah, great to have you here in Switzerland. And yeah, first time you are here on our channels. Bluestone, what's the company about? Where are you working? Where are you based?
So Bluestone is a relatively new company. In fact, really in its current formation, it's only been in place for just over 18 months. We are focused on a very interesting project that we acquired last year from Goldcorp in the southeastern part of Guatemala. This is a high-grade, low-sulfidation epithermal project that has in fact had more than $200 million invested in it. And we're in the midst right now of working through a feasibility study which we expect to be completed in the next few months. And on top of that, there's a very interesting geothermal project as well, the META geothermal project that came along with the assets.
So that sounds like you would be maybe the first real green mine in the future, if I
Possibly,
hear that.
possibly. I think there's a lot of optionality that exists here, and we've done quite a bit of work this year, kind of following up with the almost $60 million that's been invested historically in that geothermal opportunity.
Wow, that's a lot.
But it definitely presents an opportunity to produce potentially some or all the power for the mine, and even over and above that as we move forward over the coming months and years.
Fantastic. So as you said, you're working on the feasibility, of course. You want to do your mine financing or project financing next year. You want to start with that, of course. But you have already some numbers you maybe want to share with us because you had a very good PEA so far, right?
Yeah, it's not very often you have the opportunity to step into something that's had this sort of head start. On top of that, it has this exploitation license. That PEA that was completed last year as part of the initial financing demonstrated that this would be a project that would generate between 100 and 150,000 ounces of gold at an all-in sustaining cost of $490 per ounce.
Wow, that's really cheap.
This is first quartile production costs, and I think so important regardless of what your business is, that you have strong margins. And so this is something that we're building on now. You know, obviously the feasibility study will bring with it a much more higher level of certainty and something that you then can move into the project finance as you talked about. And we're expecting to have that feasibility study completed here over the next few months.
And you have the money to complete the feasibility, right?
Yes, no, we're well financed. Last year, as part of that initial acquisition, about $80 million Canadian was raised, so $60 to $65 million US. And that really went towards purchasing the asset, which was $18 million US from Goldcorp, and then obviously gave us the funds necessary to continue to advance the asset to the point we're at now.
Fantastic. Do you have to pay an NSR to Goldcorp?
So there's a 1% NSR that Goldcorp's retained along with 4.9% of the equity.
Super.
And then 6 months after commercial production, once we bring it in, we'll be obligated to pay Goldcorp a $15 million fee. So all things told, very reasonable sort of acquisition costs for an asset of this quality, and definitely as advanced as this.
Fantastic. Also, I saw in your presentation on your website, you have a 10 gram per gold grade, which is, I would say, outstanding, first thing. Second thing, you must have not go down to really large depths like, for example, South Africa or stuff like that.
No.
So you do not have those horrible development costs or ventilation costs. Can you maybe elaborate a bit on that?
Sure.
And also, what is your initial mine life?
Sure. So that's right. It is a 10 gram per ton resource. We updated the resource this September, and we're able to not only maintain the measured and indicated category resources at 1.2 million ounces, but grew them, and did that also with the inferred category of another 360,000 ounces. So it demonstrates a lot of opportunity for us to now upgrade those inferred ounces and indicated and get them into the mine plan. The PEA outlined a mine plan in that 8 to 9 years. I expect that the feasibility study will again be somewhere in that sort of neighborhood. But the inferred resources provide an opportunity, I think, for us to extend the mine life. Believe it or not, when we arrived last year, there hadn't been a geologist on the property in 4.5 years. Obviously, it was a project that was relatively small by Goldcorp standards, and with Goldcorp moving the Marlin mine into closure, the decision was made that they would then look to divest of the project. So it was a great opportunity for us to start with. As I said, high grade, 10 grams per ton. And because it's a low sulfidation epithermal system, we're actually right at the top of the system.
Perfect.
So as I mentioned before, there's a lot of infrastructure, a lot of money that's been invested previously. 2 portals come in right from surface, and currently about 40% of the ore body actually has already been developed to, not in terms of development on the veins, but in terms of the development tunnels, and have been dewatered as well. So it's quite near surface, and as you said, you don't have shafts and that sort of thing.
Yeah, fantastic. Can you elaborate a little bit more, let's say, we assume everything goes fine, you go in production. Because I saw in the first 4 years, you will produce a little bit more and then it's come a little bit off. But I assume through the exploration you just mentioned in the inferred category to bring that up, maybe you couldn't use it by now for the PEA, but it's quite likely that you can use it then, let's say, for the feasibility, right?
Sure. Yeah, well, you know, definitely that we're building on the PEA, and I think that's what it was outlined in the PEA, that you saw the production, you know, closer weighted to the front, and then we'd need to get in on the exploration perspective. I think that quite pleasingly, while the focus of the exploration program this year has been solely on the feasibility study drilling, we were actually able to come up with additional inferred ounces. And in fact, the very exciting thing about those is that most of those inferred ounces are on veins that are already in the mine plan. But of course, they haven't had they've really the paucity of drilling, so they need to be infill drilled. So, you know, the feasibility study will demonstrate, I think, that you've got a very healthy production profile in that 100 to 150,000 ounces. And then as we're actually able to get in and infill drill the inferred, and then really just start at some point here now, looking to step out and look for more exploration ounces. These type of systems have a propensity to keep on giving, so to speak, low sulfidation epithermal systems, and they do require drilling. And as I mentioned, as you know, the first time in almost 5 years where there's actually been some geologists on the property. We've got lots of work ahead of us.
That's right. And I mean, also you would be like a really cash-generating machine once the thing is up and running with $500, I call it $500 costs. Even at those gold prices today with $1,200, you would make a ton of money, of course. By the way, how much would the capex be required? Because it's also a matter like, I think you do not need so much debt on the project, right?
Sure. So the PEA demonstrated or estimated the capex would be about 170 million. I think that the feasibility study likely will be somewhere around 200 million. But you're right. I mean, just like any business, whether you're making tennis rackets or Swiss chocolates here in Switzerland, you need a margin. And this is one of the beauties, I think, of this project as well, is that, you know, 1,250, 1,050, 1,350, this project is going to make money. And in fact, in the first full year of production, when you look at you know, the likely cost structure here, this asset will probably generate as much free cash flow in its first year of annual production as the market cap today. It's not going to stay like that, Johan.
This is how crazy the markets are, definitely. Maybe one word to your geothermal plant, because I think this is totally unique in the space. And I mean, once this is up and running, I could imagine that you maybe can get all the power for your future production from that, and maybe you can sell something into the grid. Can you maybe give us a bit of an idea? I know it's more like a forward-looking statement, but maybe just for our viewers, an idea how you want to use it, and potentially what you might do with that.
Very unique. I mean, we're fortunate now that we're only 8 kilometers from the grid, and so as part of the development for the mine, we will tie into the grid, and that of course will allow us to pull power off the grid or push power into the grid. Now, over the last number of years, prior to when we acquired the asset, Goldcorp had invested almost $60 million in the geothermal potential, which is just to the east of the project. So there's 19 holes that were drilled. We've subsequently did some flow testing using some experts out of the United States earlier this year. And what we found is that without doing too much more significant drilling, that intermediate horizon is probably have somewhere between 5 and 10 megawatts of power potential. Now there's a permit there for up to 50 megawatts over 50 years. And so that's something that we'll continue to examine as we look forward. I think that it's a very real possibility that perhaps some or all of the power for this mine as we move forward could come from geothermal. And then on top of that, there's also the opportunity, potentially maybe through a partnership of some sort to see if we can exploit even more, towards that 30 to 50 megawatts. Still early days yet. Obviously, we're only into this now 18 months, in our current...
you cannot do all at the same time,
well,
I would say.
and you have to kind of focus, definitely as well, but it's a very unique opportunity, and maybe this is, who knows, at some point in the future, the first zero carbon footprint gold mine.
Voila. That would be a great environmental selling argument also.
Terrific.
Assume everything goes the way you want it. Assume you get the money, the building is done. You have to do, let's say, little things to really go in production. When do you think you can start to pour the first gold?
Sure.
What's the plan?
Well, I'd correct you, actually. There's lots of big things that need to happen. There's always lots that goes on into advancing these assets, getting them financed, and obviously going through the development phase. So we're working right now, as I said, to complete the feasibility study. I'm hopeful that I'll have the project finance in place by the middle of 2019. And then really you're kind of in an 18-month window then to bring this into production. Super. So all things being well, by the end of 2020, early 2021.
Super.
At least from the current
foreseeable timetable, I would say.
It's a pretty short window, I think, when you look at it. And again, there's not really many, if at all, you know, high quality projects like this that are really coming down the pipeline over the next 24 to 30 months. I think that's one of the reasons why we're getting a lot of interest as well from project finance groups as well. And obviously with the sorts of margins that you have here, your payback is very quick. So it's a great opportunity for Bluestone. I think it matches up very well. And with these sorts of margins, the high quality nature of the asset, the payback, and all the benefits that really would flow on through to local communities, our government partners, and of course our shareholders. This is a great opportunity for Bluestone Resources.
Fantastic. Last word on the shareholders, because I think you have some prominent shareholders, of course. As our management is 9%, which is a big, confident and trust of what you are doing, because you put your own money in. But also Lucas Landin from Geneva has, like, with his family trust, 36%, and I think CD Capital, Goldcorp. So you have already some really big names and good support, I could imagine.
Yeah, I think, again, it resonates because of the quality assets. So the Landin family has been a big supporter. They have 36% CD Capital of London. Also participated in the financing last year and has 17. And when you add management and Goldcorp, 65% of the stock sits within those four hands.
Yeah,
so
perfect.
Very strong support. A number of other institutional investors, a number of investors here in Switzerland as well that have been very supportive, and as we continue to advance the asset. So that no doubt is important as we continue to move ahead. But yes, some very astute resource investors that have been supportive of the company over these first 18 months, and I know will be supportive over the next many months to come.
For sure. Yeah, because they see the plan like you see the plan, and the plan is going gold production.
That's correct.
Super. Great. Darren, thank you very much. All the best.
Thank you.
I think we see us latest PDAC then for an update, of course, and I'm pretty sure you get your mine financing.
Look forward to it.
Thank you very much. Great. Right. Yeah, ladies and gentlemen, that was Darren Klinck, the CEO of Bluestone Resources, and you heard it. It's a lovely company going in production in approximately a good 2.5 years. Latest in Guatemala with approximately 100 to 150,000 ounces of gold. The project finance of rounded $200 million. I think it's absolutely manageable for this fantastic project. Plus, keep in mind, below $500 AISC, and this is very unique. So they are in the top position of all gold producers in the world on their cost basis. And also, I think the backing through Landin Family Trust, through CD Capital, management is 9%, Goldcorp is in. This speaks for itself. So check out the company. Thanks for watching us. Bye-bye from Switzerland.